Hello, this is Ron Henderson, President and Broker, Multi-Real Estate Services in Los Angeles. It's May 17th, 2013, and this is a real estate market update for the San Fernando Valley, Los Angeles, California. Are you ready for a change? For the past year, we've been dealing with a major supply and demand malfunction. There's been a lot of big money coming in from hedge funds, international and domestic investment groups attempting to buy any decent property on the market. This has forced out a lot of the local buyers that can't compete with the cash transactions, and the pricing has jumped up over 25% in the past year because of bidding wars and lack of inventory. Well, it finally looks like we're going to see a change in the market. You can see in this chart, inventory is still at very low levels, but it's stabilizing, and month over month, we've had a slight uptick. What's more telling is the amount of new listings coming into the system. It's not the actual quantity that you want to look at, but the trajectory and increase month over month of the new inventory. I may be the first one calling a change to the market, but it's my interpretation that we may see some supply and demand equalization over the next few months. The property location and price range will still need to be taken into account. You can see that there's a lot of buying activity in the $350 to $400K price range. But the inventory levels are way below what's needed to maintain the sales activity or the buyer base for this price range. Well, what's next? The investor activity will slow down, partly because the pricing is getting high enough where the capitalization rates won't be attractive and the easy money's already been made. We will have a multiple offer market in some price ranges for a while, but the 20 or 30 offers may go down to 5 or 6. And a lot of reluctant sellers may start to put their properties on the market, because longtime property owners have realized appreciation recently and many are no longer upside down on their equity position and are free to move. Many have been holding off on selling because there's been no place for them to move to. When inventory levels stabilize, there'll be some upleg options and the inventory levels will start a healthy cycle. There is some downside to the future market. The buyer base will be constrained. The free money in the last market will be a thing of the past. The qualified mortgage portion of the Dodd-Frank regulations will be kicking in January of 2014. It's especially going to be harder for the self-employed individuals to qualify. The Federal Reserve has been artificially forcing the interest rates down by using quantitative easing. When they quit buying the mortgage-backed securities, the rates will go up to market levels, which can be a full percent higher than where they are right now. The higher rates will signify higher mortgage payments, and in conjunction with the higher property prices, will equate to fewer buyers qualifying. The employment levels are getting marginally better, but aside from certain vocations, the income hasn't kept pace with the property appreciation. It could take some time before the information I conveyed hits the media, but when it hits, it usually feeds off itself. Personally, I'm looking forward to a more sane market, but given the regulatory and economic headwinds, I think it's going to be a little while before we see any kind of true stabilization of the market. If you're in the Los Angeles region, have any specific questions, always feel free in contacting me through my website, mres.com, or the email address or phone number shown below. Till next time, take care.